Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. And rolled on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you guys got it. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody, and welcome to Wednesday, FOMC Day, and we have what is possibly the most insane, the most every, whatever kind of superlatives I could possibly come up with, and I'm just not going to bother, the biggest FOMC of our lives, possibly. I mean, every time I say something like that, like something comes along and it ends up being bigger. But here we've lived with a Federal Reserve that very much relies on forward guidance. And now we're in a situation where I'm not 100% sure whether it will be a 50 or a 75 basis point hike, but it's a big departure from that. FOMCs have kind of been like, we know what's going to happen, and there's more uncertainty around this one than like this is the greatest amount of uncertainty possible in the current framework. While we're getting a little bit of movement here, let me just double check here, make sure I'm not missing out on something. Oh, that was the retail sales. Negative spot 3 versus a forecast 0.1. Treasury's moving pretty excessively off of that. Well, so when we come into the charts, man, today is kind of so we had that huge move on Friday, then the huge move on Monday, came back a little bit, huge move yesterday. Man, this one I was so shocked because I came in here and we took like $20 off of that and then we missed all of this. Right? And now look, on the overnight we're like retraced almost all of it. So there's probably just as much opportunity today if we're willing to put the risk on, but I'm a little, I don't know. Eli says we need 100 basis points, but 75 is in the cards, and 100, I don't know, man. I don't know, like, let's go through the charts first before we get into that discussion, right? Okay, here's the ES. ES just kind of languishing at the lows again, like 3,700 kind of has a little bit of gamma on it. It would be very difficult for them to push below that. I don't think that they're going to do that unless they hear something in the FOMC that they really don't like, okay? Oil, still kind of chopping around here. No decisive move yet. Natural gas take a huge hit yesterday. Wow, that's a pretty big move. Gold and silver maybe actually coming up here now. That's interesting. And Kappa kind of still languishing. Bitcoin. We're going to talk about Bitcoin. They were getting all excited last night, but it bounced off of 20,000 for now. And maybe it would take an FOMC meeting and an interest rate rise, and maybe Bitcoin pushes lower. And the dollar's still up above 104. I have to say, anything over 100 on the dollar is kind of like, what? It's just kind of it just seems a little crazy to me. Okay, so here's the thing about the 75 basis point hike. Again, the Federal Reserve has relied on forward guidance a lot, okay? And, there was this talk about, hey, maybe we'll do a 75 basis point hike. I think there's one guy, I forget his name. I forget who it was that was the hawk, okay? But there's one guy that seems kind of hawkish. And he would probably be trying to convince everybody to do a 75 basis point hike. All right. But last time that we heard from Powell, he basically said, oh, no, like there's no way we're going to do a 70. We're only thinking about a 50 basis point hikes right now. Right. Well, is the situation dire enough that the Federal Reserve will change their minds before the meeting? Well, that's what Mr. Timmeros is saying, the supposed Fed whisperer. And it is right. He has in the past kind of been an outlet for the Fed to basically like leak things to the market and kind of give us forward guidance. But what if he's wrong? Right? Like, The market is pricing in almost 100% chance that it's going to be a 75 basis point hike. But when I told you guys yesterday, it wasn't like nearly that clear. And the online crowd is not completely sold on it. And especially when you look at the way that the economy is looking, ECB this morning doing an emergency meeting to try and deal with the split where periphery countries' bonds are just absolutely crashing. So basically, they can either try and tackle inflation, or they can keep interest rates low for these periphery countries to be able to stay afloat. And you're gonna have to pick and choose one of them. And they had an emergency meeting. I don't know if anything actually came of it. Right? So like, that's where we're at right now. And then people are looking for 75 basis point hike that is almost certain to send us into a recession. So what actually happens? I'm not sure. I mean, I think that I have to go with the conventional wisdom, what the market is pricing in, which is the 75 basis point hike. But I'm starting to become a little bit skeptical about it. You know what I mean? Telegraphing is Powell's MO. However, real inflation, it's not just Powell's MO. That's the way that the Federal Reserve has basically functioned for the last like 15 years, right? However, real inflation is much higher time to tackle it now. In my opinion, we shall see. Well, you may well be right. We're kind of getting into an area where I'm not sure. Like, here's the thing: I've never lived through this sort of a thing before. I wasn't trading in the 70s, right? Were you? I don't think we actually know, and I don't think that our economic models are really sophisticated enough to really tell us with a surety how aggressive we really have to be, right? Again, it's like one of those things where it's like, no matter what you do, if you're the Federal Reserve, that is, no matter what you do, you lose. No matter what you do, people are going to complain about it, right? Because if they raise interest rates here 75 basis points and we're going to go into a recession, then what's going to happen is all of the liberals are going to say, see, the interest rate policy, it doesn't work. You need to keep interest rates low. And the whole maximum employment thing is not. That's what they're going to say. That's what they're going to say. And if you don't do it and we continue to get inflation, right? Doesn't you lose either way with one part of the population. And just do 250 points. Well, you're with, okay, so let's come here and let's talk numbers, okay? Because Mr. Jeffrey Gundlach was the bond king, a person who is incredibly insightful, all right, and I very much respect, was saying something pretty similar to you. Okay, so Fed Watch. Wait here for a moment. Okay. So there, basically the market is pricing in a 95% probability that is going to be 150 to 175. Okay. So what it's right now, it is it's 75 to 1, right? And this is a 75 basis point hike. Okay. Jeffrey Gundlach is saying that they should just go straight to 3. which is basically like do 250 basis point hike, yeah, and just be done with it. But I get the sentiment, because if we're in a situation where you have to hike, you have to send the economy into a recession, then why not just do it now, right? Why not just do it now? The problem is that this number actually does matter. like here's one of the things that I continually see in the market that I think is kind of a little weird. It's like, I don't know if people actually understand what we're talking about here. I'm not saying that that's the case. It's just, that's what I'm always thinking when I when I see this stuff, right, is that everybody thinks it is just about the expectations, right? Well, the Federal Reserve has to raise interest rates high enough to shock everybody and make them all unhappy about it or whatever, in order to kill inflation, right? But the federal funds rate does actually impact things, right? There are transactions that you could do yesterday that you won't be able to do tomorrow because the interest rate will be too high, right? Like there are certain deals that the banks can't do now because they don't have the capital reserves for it, essentially. Like that's how it affects, is like, somebody wants to go and do a deal. They want to go and buy a company, let's say. You're a hedge fund. You want to buy 20% of a company. Okay. So then Goldman comes along and they say, okay, well, here's like how much money you would have to borrow in order to make that transaction. And here's the price that we think we can get you, and yada, yada, yada. And they give them a price, and the company comes back, or the hedge fund comes back, and they go, oh, no, actually, we can't afford that. Right. They could afford it yesterday because it would have been cheaper because of the lower, it would be cheaper for the bank to go and borrow the funds that they would have needed to complete the transaction, and now they can't, right? Because it probably matters more with mergers and acquisitions. But there were things that you can do yesterday that you won't be able to do tomorrow because of the higher interest rates, and that has a real impact. Like people don't realize, because it's all hidden. I mean, it's not hidden, but it's just like, you're talking about super wonky stuff that only the people, not even everybody at the banks, but only certain people at the banks really care about. But it has a very dramatic impact on the economy. And if you raise that federal funds rate too quickly, it would be such a shock to certain businesses that you would almost certainly have a absolutely catastrophic financial crisis of some sort. So I don't think that you want to get too silly about it, right? Like I kind of feel that anything more than 1% at a time would probably create too much chaos. But I mean, now the split side of that is, look at the market. Look at the S&P 500 and the overnight action, right? Like we're up overnight. Everybody, based on the options, seems to be suggesting that after this FOMC, we have a rally, unless they do a 1% basis point hike, right? Like people are already, are already calling it not enough, I guess. COVID didn't, well, but COVID did do it. That's the thing that I find really scary. Is that, okay, so here's the thing about COVID that always shocked me, was that the Federal Reserve started putting in excessive amounts of stimulus into the economy from the very get-go. Like, it wasn't like, oh, we've shut everything down and this is just absolutely dismal for the economy, I guess we have to hike rates. Like, they were way in front of it. They were way in front of it. You know? I think that they knew that they had to, because the reality was that the financial system, in terms of interest rates, was not really in the most healthy spot pre-COVID, right? And in some respects, COVID was kind of a little bit of an excuse, right? Because we had this whole thing that we were dealing with where people were saying that we were going to go into a recession anyways because of the interest rates, because of the flattening and everything, right? And COVID kind of short-circuited all of that. So, and I think a lot of it was that people weren't too happy with the interest rate policy to begin with. It kind of gave them room to come in and change things. I don't know. Just that one's a little bit more of a spitballing thought, but so I'm still like got all my morning stuff to go through. I'm like super tempted to, I kind of want to come in and try and make more money on this. $50 this morning maybe, but it's moving up at the moment. I'm not so sure. You notice I had my big trade over here in ZN. I took it off at 114.11, I think it was. No, it wasn't that. It was. Oh, no, it was 114.11. I took it off at 114.11, so I saved myself almost. Oh, I saved myself a whole point. Took it off. So that was a good call. Because again, even though it's like it should be a 75 basis point hike, number one, I'm starting to get a little bit nervous about just trusting this whole thing to Nick Timmeros. and two, even if they do the 75 basis point hike, I'm not 100% sure how the market reacts to it. Well, let's create a poll. Fed hike. Today we'll do it. Will it be 50 basis point, 75 basis point, and we'll add an option for 100 basis point. Okay, because now people are talking about that. We'll ask you guys and see if that changes your opinion. All right. And I appreciate, I appreciate you appreciating my perspective. Negatives to either side, and the Fed put themselves here, yeah? Well, there was that story where I was kind of reading to you guys yesterday from, was it from the Washington? I forget who it was from, but they were basically walking through the whole thing about why the Fed made the decisions that they did and how they kind of screwed up. And it was something that we had talked about before, right? Which was that in many respects, policymakers were fighting the last war, right? They were treating it like the 2008 crisis, and so we needed to print and put all of this stimulus in. And the reality is that a supply side driven crisis created by widespread lockdowns of the economy is very different from a financial liquidity crisis, right? And the way that you need to respond to it is different. Who knew? Anyways, now let's check and see if there was anything interesting on Twitter overnight that I missed. June roll is complete. Sure. Yeah, see, here's Nick Timmeros tweeted about an hour ago. The 30-year fixed-rate mortgage rose to 5.65 last week, the highest since 2008. The Mortgage Bankers Association said lenders this week are quoting rates above 6%, so expect a bigger jump in next week's survey. Of course. Thoughts on coal producers? Oh, man, I don't know. I don't really know the coal industry. I've been trying to learn more about materials, but I have to say at the moment, for my own money, I am interested in rare earth metals and copper. Copper hasn't been looking so hot on the charts lately, right? But the next cycle, like if the Federal Reserve pushes us into a recession here, I'm loading up on as much copper as I can get. Okay, anyways. Nick so I added him to one of my lists here, and he tweets quite a lot, actually. Brannigan with Bitcoin valuation around 400 billion. Now, this is how it stacks up against some well-known household names. Okay. Nassim Taleb, Bitcoin is an intelligent test. Bitcoin's blockchain rationale, which makes it attractive to people conspiratorial yet stupid and naive, is to escape the custodian/trust system. Yet, Micro Travesty claims it has at least 410 million worth of Bitcoin in a custody account. Yeah, right. So Nassim Taleb falls into this really strange dichotomy that I continue to see in the discussion around Bitcoin that I find incredibly curious. And it is this: he is saying this is attractive to people that are stupid and fall for conspiracy theories. Okay. So, when you're talking about people that are dumb and fall for conspiracy theories, they're basically talking about the far right, libertarians and QAnon type people, right? But the reality is that the majority of Bitcoin holders are liberal. So Nassim Taleb kind of has this thing. It's interesting. He is a very disagreeable person, and he does not moderate what he says based on uh, what people are going to think of him or what they want him to say. But he is liberal himself, as far as I can tell. So, and he falls as far liberal as to kind of turn into the, far right hating type, right? So, some of his dislike for Bitcoin seems to be derived from the feeling that it is a libertarian wet dream nonsense, right? And so he attacks the followers of Bitcoin on that basis, when the reality is that the followers of Bitcoin fall closer to him on the political spectrum than the libertarians. LG, I fit that right-leaning libertarian, very ambitious about crypto. Well, yeah, that might. There are both sides. Like, I think it's like 55% are liberal, something like that. And I suspect that the reason the stats are the way that they are is because it's really young people that are falling for it, really. So, I don't know. He calls it an intelligence test, but I think that the reality is that there people weigh risk versus reward, right? And when your reward is potentially, 10x your money, or historically you 10x your money, then you almost don't care what the risks are, right? People don't care what the risks are because people cannot think in fat tails. And it's not an intelligence test, it's an education test. The more educated you are about finance, and the more that you understand the statistical distributions that tend to occur around finance, the more you realize that it's not worth the risk in the end. That this is a very fat-tailed thing. That the tails on a yearly distribution are like this. There's most years are going to be really big, and then there's a dip here, and then way over here at like negative 100%, there's this huge spike like that with one data point. That's what Bitcoin, that's the distribution of Bitcoin. That's what it's going to be, is you tend to make money most years, and then 1 year is just going to go bust. That's how it's going to happen. And that year might be this year. It's kind of starting to look at the moment that it might be this year, but we'll see. We'll see. That's a little bit too big. I'm only back in my Twitter feed 2 hours here. Mohammed Al Rain talking about Europe. Bitfinex retweeting Zhu Su says the best kept secret in trading is that far more money has been made buying new highs than any other type of strategy, and it's not even close. Well, I would sure love to see the stats that he has on that, but I think he's probably right. It kind of goes back to this thing that we were, that I've been talking about on TikTok, though. Man, so yesterday I really decided to try and kick the hornet's nest, and man, did it work. Because there's this lady, and I tell you what, man, this was just like, she was total communist. I mean, I don't know if she identifies as a communist, but everything that she was saying was basically like what I would expect communists to say. And she was talking about eating the rich and all of these things. And anybody that was disagreeing with her or trying to explain the economics to her were like, what's with all of these white men telling me that I'm wrong and mansplaining to me? Okay. So her complaint was Procter & Gamble. Actually, I had a thought about this. I want to go and look at this. Okay, so she's mad that Procter & Gamble is putting less product in their packages and, basically shrinkflation. And, she thinks that we should punish them. She thinks that we should punish them. And I said, well, okay, so if you think that they're charging too much, then go start your own company. Go start your own company, and clearly you should be able to undercut them. So let's see here. PG is the stock, Procter & Gamble company. And I'm wondering if we come into like a 1 month period and we come back to 2012. Okay. So let's say that in December 1st, 2012, right there. So do they have a measurement tool in here? Surely they have a measurement tool of some sort in TradingView, right? Maybe I can just put long position. Let's try that. So if we got in at 12 and no. Okay, so you've made 111% over 10 years. So you're making an average 10% return. Shift click. Doesn't matter. I got it. So you are making 10%. So I was saying, why don't you start their own company? And they're like, well, no, because they'll do everything that they can to keep you out of the market. Okay. There was one of these people that were like, well, but I don't have any capital. That one was, I loved the comments that people put back on that because it really is like, that there's all these wonderful things in our economy where there are people and their whole job, these people, they're called venture capitalists, and their whole job is to get the people that have business ideas and get them together with the people that have capital and don't know what to do with it, right? And that's their whole job is to facilitate this investment activity, right? So if you have a good business idea, you can find the capital if you know what to do. And it's a skill. You have to work at it. You have to but the biggest thing is you have to have a good idea. So here's the thing. Who is going to invest in your idea when your idea is essentially companies make too much money and we can take a little bit less, right? Nobody's going to invest in that. They ain't going to give you money. Heck no. The whole thing here is like, so they're all complaining about, well, you can't start, it's too risky to start your own business. And so then I'm like, oh, whoa, hold up. So you're telling me that there are risks to owning a business and that you don't want to take that risk unless you are adequately compensated by the potential reward for taking that risk. Oh, isn't it funny how all of a sudden when it's your own money, everybody becomes a libertarian? Not that libertarians have it right, but it's just like, right? People only care about themselves. Well, you can't run around and say, these guys are evil and you're making too much, and then be surprised when people don't want to go and make investments in the things that you're attacking. Right? Like, listen, this is the one that just absolutely blows my mind. it's like I hate when I come out and it's something that I say ends up being so ridiculously partisan, because from my perspective, when I'm pushing my content out, I would rather the audience be liberal, to be honest with you. I would rather the audience be liberal, because here's the thing: the conservatives, they have their own view of economics, and a lot of their view of economics is wrong, but they've mostly got the free market thing correct. But from my experience, there is a portion of the, or rather the base of the Republican Party is incredibly economically illiterate. It just straight up is. I don't know why that is, but there's a portion of the GOP base, the people that tend to be the ones that would comment and stuff, that are very economically illiterate, right? And then you come over here on the left. Well, the majority of Wall Street is on the left. So the people that I want to talk to, they're left leaning. That's why I would rather have them be left, right? But then there's this portion of the left that is just bat poop crazy. They're absolutely insane. These basically communists, right? And they know absolutely nothing about what they're talking about, and they make all of these crazy proclamations about what companies should be doing and what policy should be that are just insane. And here you come in, they're complaining about oil companies aren't pumping out enough supply, and that companies are creating shrinkflation. And so what do they want to do about it? Like, somebody was proposing a bill in Congress the other day to tax oil companies more because they're making too much money. And I'm sitting here like, are you nuts? You want more oil supply, so you're going to tax the people that are producing it? What is wrong with you? Come on, that is not going to create more investment in that area so that we can get more supply. You're just making the situation worse. And this is not, this shouldn't be a controversial opinion. Like, this is like basic economics. And I'm pretty sure that all of my liberal friends over at the big banks understand this and are sitting here like aghast that their politicians are that dumb. Well, there's the whole thing is that it's not like there aren't. So if you have a problem, I mean, I like it, because my whole argument here is, like, the best way to destroy the economically illiterate liberal. Listen, there's economically literate liberals, and it's a very different thing. Okay, but the communists and stuff is when they complain about something, you say, go and start your own company then, right? Because what they're essentially trying to say is that the problem here is that individual corporations are greedy, when the reality is that those corporations are only acting as any rational actor should, given the environment that they created. That's the real problem here, right? So, yeah, if there are some places where there are some people that have been historically oppressed, let's say, and they could start their own business, but they would probably find it very difficult to do given their circumstances, right? And so why is that? Well, it's because of the policy environment that we've created in many of the places that the most disadvantaged people in our country live, have absolutely terrible policies. Like, right? And so then what do? They go and burn all of the small businesses down. Anybody that actually did decide to take the risk anyways gets punished for it. What? Ugh. I'm all like, here's the thing is you need to create an environment that people are going to invest in. I'm totally down with, when I worked for Goldman, one of the things that I was always really impressed is that they had a lot of initiatives where they would put money specifically to business owners that were black or women, and those programs were all incredibly successful. They were all incredibly successful, right? In as much as there is a problem, it usually comes down to uh, government policies, which is why I thought the whole thing was so funny, because I said, well, why don't you start their own company? And they thought that they were making a great argument, like, oh, but I can't because of all these things. And I'm like, aha, you fell for my trap card. Because why is it that way? Your policies. It's your policies that are causing that. Meanwhile, the same government is now making an extra 15p a liter on VAT tax on the increased petrol. Oh, man. Yeah, anyways, I have to say, the economically liberal is a far more interesting thing, because now you're getting into somebody that really kind of understands the things that I really like to talk about, which is that the market is not informationally efficient. And so we have to be very conscious about how we structure the market, right? Like, the whole problem here is that the libertarian approach to things, which is just deregulate everything, is just dead wrong, because the invisible hand, the invisible hand is a thing, but the invisible hand is not God. The invisible hand will get it wrong and will do things wrong, and it's all depends on how you structure your market. So we have to think about what's the best way to structure the market. I can actually have that conversation with the economically literate liberal, right? And then the challenge is trying to convince them that a lot of these regulations that they've put in place, mostly because they thought that somebody made too much money, don't actually accomplish anything, because they don't structure the market in the way that we want it to go. But I tell you, the one thing that I do know about how you structure the market is that you can't go in and complain about people that are making money and punish people that are making money and then expect people to want to invest. It's crazy. Hmm. Good thing you're from Africa. It's really weird that well, that's one of the things that is, so there are these white nationalist people out there, right? And one of the big things that they try and harp on, or like their argument, the thing that like draws people into it, which is really quite scary, honestly, is it's a logical fallacy. It's a misunderstanding of statistics. They come out and they say, okay, well, if you look at like world statistics about IQ, you can see that some races are smarter than other races. Well, that's a misunderstanding of statistics, because there's more variation within the groups than there is in the variation between groups. So the average and comparing the averages of groups is completely pointless, right? But what Mahdi is talking about there, I think, really shows a conservative argument, which is that your culture matters more than your race, right? Or rather, the culture that you were brought up in has a lot more to do with the success that you're going to see in life than your genetics do. And I think that is probably true. Like, there's going to be a nature and nurture component to everybody's behaviors and what they do and everything. But it seems that in our modern society that we've started to trend way too far into this nature part. Everybody thinks that everything is about nature. This is very much at the heart of a lot of social justice warrior thought, especially in the LGBT community, right? The approach in the LGBT community is that your sexual orientation is 100% nature. And so when they're they want to talk about things like homosexuality in school, it's not because they're trying to turn your kids gay. It's because they're trying to identify the kids that are already gay because they think it's 100% a nature thing to ensure that they don't become marginalized and oppressed. And the problem is that there's nothing in the human psyche and development that is 100% nature. It's just not. Like there are things, let me tell you, here's something that's very much nature, okay? Humans tend to be more concerned about loss than profit, right? We are risk adverse because that's how you had to live, right? That's what got our ancestors to where we are today. That's why our ancestors lived, whereas other people died, right? But it's not really very pertinent in the modern world now, isn't it? That's a part of our nature that we have to fight against. They do have a point in that there's a growing anti-white sentiment in the West, especially from the left. The hate never ended; it just shifted. Well, so what I see at G59 is that there are some people that might have some very good points about certain injustices that exist in our society. But what is really happening is that these people are becoming victim to like a mind virus, right? They see, oh, there's injustice, and then they build this whole ideology around that one idea that essentially becomes this: there is injustice, ergo what we need to do is we need to take the people that are at the top of the hierarchy and get rid of them, and the people that are at the bottom of the hierarchy and let them go up to the top, right? Really at the heart of it, think, like, I know I'm getting super political, but like this is really important to understanding the world and business and trading. It really is, okay? Their whole ideology is about tearing down hierarchies, right? Tearing down the white male patriarchy and installing minorities and LGBT people and traditionally oppressed groups, right? It is ultimately about destroying the hierarchy. And here's the problem, okay? Hierarchies exist for a reason, okay? Human society does not function without hierarchies, okay? There are problems that come from hierarchies, don't get me wrong. We got to deal with those things, okay? But when you tear the whole system down, you just get chaos and more oppression in the other direction, okay? Well, after the French Revolution, it was really messy in that country for a long time, okay? And those were people that were bringing down a hierarchy for very, very good reasons and had very, very good ideals coming out of it, okay? But it's just, I'm telling you, it's like it's a destructive virus. You have to understand that hierarchies exist for a reason, and that just blowing the whole system up is not the way to go about enacting change, right? And so when you're coming in here and trade, you really have to think about what are the hierarchies that exist and what benefits do they provide to society, right? If you don't have a hierarchy, then people don't have a connection to their community, and they don't contribute, and you don't have a productive society, right? And what we're seeing right now with the woke faction is there are people that have very good issues, but they have their advocacy and the ideology behind their advocacy has basically created a mind virus that is basically hell-bent on destroying society. The Jigsaw support folks let me know that the $100 discount link in the channel comments is expired. Really? Okay. Well, we can go try and fix that. That's a little weird because it's like a specifically generated one, but maybe they've changed it again and it needs to be regenerated. See, here's the one. And it's just speculator Seth. Change coupon code speculator Seth. I might have to ask Peter about that because that's not right. Wait, which one are you talking about? The $100 off Jigsaw Day Trader Independent. That can't be expired. How is that? I don't know. I'm going to have to go and ask them about it because I don't think that's right. In fact, I'm pretty sure that somebody used the coupon this month. So I don't know. That specific one. They've already used it recently. Huh. See, the link doesn't apply the discount. Edit record, change coupon code, no. I don't know how you do it then. I can see the screen where it shows you how to, but it's not telling me the... Well, $5.79 for trading applications, not that. I mean, it's cheaper than Jigsaw. No. That's just a one-time fee. You do pay $50 a month for the live trade license, but yeah, forward me the email because I don't know how to. I'll have to try and figure it out off stream because I'm not 100%. You know, I don't want to sit and here and be like for like 20 minutes. So something's off. So can I? So speaking of which, we talked about this yesterday, but I just want to make sure that you guys hear it because I'm sure that there's got to be at least one or two of you guys out here that this applies to. News Squawk, which is a very great Squawk service, especially if you're trading the bonds, because they will give you information in their fixed income feed that I have not seen anywhere else. Okay. So I have an affiliate link for Financial Juice, and I think that that's really the best choice for the majority of people out there because it's only $70 a month, and you can buy like a lifetime license, which is like $1,000. Okay, but News Squawk is doing a deal right now where you will basically get a year for $1,500. So like it comes out to $150 a month for News Squawk. So for some of you guys that are a little bit higher rollers, that's a good deal, man. Especially if you're trading the bonds, man, you're going to benefit from having the News Squawk. But more so than that, if you have done their trial in the past for News Squawk, right? Because I know that a lot of you've probably done the 1 or 2 week trial, and you're like, oh, this is awesome, and I wish I could afford it, and then you move on. Well, they've reset everything, so you can go and start your trial again. You can go and get a new trial from News Squawk, and my understanding is that you'll be able to do it again in the fourth quarter of the year when they they're revamping their website. So it's going to change anymore. Is there any difference with paid or free Financial Juice? So I'm not 100% sure what the free Financial Juice is at this time, but I believe that the free Financial Juice is delayed. So let's come and look. I'll just open up a different web browser. Yeah. I don't know by how much it's delayed by, but I think it's delayed by like 10 seconds or something. So plus there's all these other little things that you get. Now, the difference that you're going to get between News Squawk and Financial Juice, there's kind of three things that I find News Squawk does really well that I really appreciate. Is number one, they are really good at knowing what is like relevant information and what is not. So I often find myself listening in Financial Juice and I'm like, well, that might be beneficial to some people, but for me in fixed income, I don't really care. But if you're listening to the fixed income feed at News Squawk, almost anything that comes over the wire is something that you want to listen to. So that's the first thing. The second thing is that they have news that is like fixed income specific. So for instance, if a large block trade is coming through in the treasuries, you'll get an alert about it. And the market really reacts to those things that we sitting here normally we don't notice, and you can really make money off of them. So that's like a very valuable thing. Like it will come over, you can see the block trades after the fact on the CME website, but nobody's sitting there refreshing that page constantly to see if there's a block trade coming through, right? So having it come over on the News Squawk service is really valuable. They have a regular newsletters that tell you like, here are all of the bond offerings that are going to be happening today, and kind of like color commentary about how big it is compared to what the market was expecting and how much demand they expect to have for it and things like that. Like I can't find anywhere where there's that kind of commentary about bonds available to a retail trader except for through News Squawk. So that's really, really valuable. And then the other thing is that you get like these daily reports. So like you can actually read this report for free on News Squawk, and I read it every morning, where they just talk about like what the news that happened overnight was, right? What the setup for the day is and everything. Like that's really valuable. So I don't think I'm going to do they gave me an affiliate link. They gave me an affiliate link for News Squawk. But I'm not going to post that link in all of my videos, just because I don't think that it applies to most of you, right? But I'm sure that there's a few of you that are making money that could afford that $150 a month, and I think you should go for it. And for that one, you don't need any special link or anything. You could just go to their website. Because what the affiliate link that I would give you like $30 off, but it wouldn't give you 50% off. So just go to their website. But I was really excited about that. I thought that was really, really cool. So, and then they gave me a month to listen to see how their services changed. So I'm a little excited about it. I'm listening to it right now. Man, and now you got me all hung up on that, John. This is really weird that it doesn't apply that discount. I'm looking at, I'd love to come back over and look at it again, since we're kind of, I don't know, the way that the trade is going through in the treasuries right now, and the spread that we have on the 10-year kind of suggests to me that this is going to be a lot like yesterday. Like, it'll move at some point, but it might be long after I'm done, and it might not be worth putting the risk on. Okay. Maybe if I change it to be like speculators have 0-1 and save it, will it then give me the no, it does not. Don't note to self, don't trade at 1 p.m. Yeah, right, guys. You definitely. So I'm wondering if they changed the base thing, the base URL that you need to use. No, I need to open up Chrome again. No, it does the same thing. That doesn't apply the discount. The thing is inside of the interface, I don't see anything about like how you. Why is the first move always wrong? Are you talking about in the bonds? So I think that something that's been happening in the bonds is that there is, strangely enough, somebody buying bonds. So it's probably some foreign fund. It could be Japan. I don't know. And they seem to be interested in buying them like right off of the open. So there's always this move of buying off of the open, and then it's like once that meta order is done, then they just sell all day. And I think that that's what's been going on. And how long that goes on for, who knows? Oh, they added a new channel requests. Well, I'm going to go and change this back. I'll just ask here. Yeah, we'll see if they answer me in chat Discord. Otherwise, I'll have to like send them an email. All right. So let me come over here. So anything going on? Okay, so we're having a move in the euro. Ooh, and we're having a move in silver. Yeah, they were already kind of raised. I mentioned that gold and silver were up overnight. I was a little surprised, but when you look at it on a shorter time frame, you see that the rally that they're having in gold and silver is quite excessive. Yeah. I tell you what, the Twitter has been a little quieter today. Twitter's been a little quieter today. But I guess part of that is like we had a lot to say. We had a lot to say here at the beginning, but now like we've put all that out, right? Now it's just kind of like we'll see what happens at the meeting, right? By the way, how did our poll go? What's our poll at? Well, you guys are mixed. 28% say 50 basis points, 65% say 75, and 17 say 100 basis points. Isn't that weird? Is the market is pricing a 95% probability that it's going to be a 75 basis point hike, and yet I can say with complete confidence that this is the most uncertainty that we've ever had around an FOMC meeting. Hey George, I haven't seen you in a while. How you doing? Am I just overthinking it? It's really going to be a 75 basis point hike and we should just accept it? Hey, maybe the Treasury should go back up to 3.5. Could do it. Well, E-mini is we're seeing a net buy in the volume, but the open has been bearish in price. We dropped in price despite the buying. We've been seeing that difference a lot lately, right? During the pandemic era, it was almost always like, well, I don't know. During the pandemic era, it didn't matter what it said, it was going to go up eventually, right? But since then, these situations where the price and the cumulative delta disagree on the open is happening a lot more often. Well, the treasuries are starting to push down pretty aggressively. We're not quite to 3.4, but what, really? Jurassic World is about a pharma company that uses DNA-altering pathogen to destroy farmland and deliberately cause a worldwide food crisis to force everyone to buy their products. Science fiction sure is fun. Sticks and Hammer and Scott Adams. Okay, whoa. Are having a friendly debate here. Elon Musk says he would likely vote for Ron DeSantis for president in 2024. And then Scott Adams says Trump's 2024 path just went away. And Hammer says, I'll take that bet. And Scott Adams says, depends if DeSantis runs, he might not. And then Hammer says it depends more on if Trump runs. DeSantis will sit out if he does, and half the states will suspend their primaries, ensuring Trump is the nominee. I'm not so sure. If I was Ron DeSantis and Donald Trump ran, I would still run. So for two reasons. Number one, you want to set yourself up as the next in line, right? So if Donald Trump does run and does win the Republican primary, you want to have yourself set up as the next president after that. And that's either going to come from doing the best in the primary next to him, or from becoming his vice president. So if Ron DeSantis runs, high chance that he becomes, oh, I'm going to respond to him. No, I disagree. Nah. What would you call it when it's a campaign but it's not a serious one? Let's see. Let me go back to this one. The comments. The locust in Jurassic World domination are almost as big as the ones we have here in Florida. you have a locust problem in Florida? Did you know? Oh man, the spread here in the 10-year is really bad. But they look like they're gonna make a push for that 3.5 maybe. I don't know. I mean, this is still 10 basis points away, but that's well within the range of volatility that we've had this week. So who knows? Kind of curious the way that it's playing out right now, though, isn't it? It's not exactly the kind of market that I would prefer, but probably could get away with a trade somewhere. I'm not certain enough that I want to take it. I mean, it could take a long. Like the thing is it's going up, so it could take a long. But especially at the current time, I think I would need to be a little bit careful about this pulling back in my face a little bit, right? So did you know that a grasshopper and a locust are basically the same thing, just under different conditions? Like if there are too many other grasshoppers around, then it turns into the locust, and then you get this aggressive bug that devours everything. It's crazy. It's crazy stuff. President Joe Biden calls on U.S. oil refiners to produce more gasoline and diesel, saying their profits have tripled during a time of war between Russia and Ukraine. Well, yeah, but they're not going to invest unless they think they're going to continue to make money, man. So see, News Squawk was just telling me about some options activity in the 30-year. Put spreads much, way, way below our current prices. Way, way below. See, you don't get that anywhere else. I don't think I want to spend $1,000 a year on that, though. I think that would be a bit much. Yeah, I don't know. Like it's screaming by me in the yields here, but looks like there was a little bit of a sweep through here. Something that is interesting that will happen is you'll see the treasuries moving and the 10-year doesn't because nobody wants to hit into it. But you can be the one that hits it and then all of these orders pull. So you can like literally force the catching the edge trade over here. It's great when you get those. Although I remember the other day I tried doing it and it didn't hit. Yeah, and I see CNN reading a story about Larry Summers calling for a recession. What do you think of Decentraland or just VR bot land in general? Also, first of all, I don't want to have anything to do with the cryptocurrency market right now. This is going to be the point at which everybody says buy the dip, and this is when you want to start accumulating and everything. But I'm just so fed up with the space. I don't want to be involved anymore. And now as for VR, I think that VR was just a part of the 2021 bubble. I don't think that virtual assets are worth anything. Like it's, of course, everybody gets enamored with this idea because they saw how much money they made with Fortnite and everything. But like the thing that all of these people are not realizing about that phenomenon is that people are willing to buy the items because of the game. The draw is the game, not the items, right? You have to create the draw first. And all of these cryptocurrency projects are basically built around the economy and the items, thinking that people are going to come to their projects because of the economy and the items, and they're just not. I'm not going to go and grind and waste my life away for virtual assets when I can put that grind to work in the real world and get real assets. So let's talk about Garlic Coin. Sure. Because I haven't looked at it through this whole thing. How have they been doing? It's been kind of fun with Garlic Coin because every time that there's like a crazy move in the cryptocurrency markets, like Garlic Coin is unaffected. Yeah, let's see here. So you come in and go to my Coin Market Cap watch list. Oh, they've been getting hammered. They are but they're still above a cent, almost 2 cents. Almost 2 cents, really. But weren't they closer to like 6 cents earlier in the Yeah. It's just a slow and steady downturn when you look at it in price. But if I come back over here and I show it in Bitcoins, is it so bad? Nah, it's basically flat. If not, positive that like it was at the beginning of the year. Here, we'll do both of them. Yeah. Interesting. So it looks like Garlic Coin's not doing so well. I have to say, like the thing that I think this shows that Garlic Coin, at least we didn't peg our national currency to be good grief. So what I think that a coin like Garlic Coin shows, why would you invest in somebody else's Ponzi scheme when you can start your own? So this past market cycle, almost none of the coins that were really popular last cycle took off at this cycle. Dogecoin was the only one, and that was probably a lot to do with Elon Musk. So even though Garlic Coin was really, really, really well positioned for a pop, and it in fact did get a pop for a while, but it kind of got short-circuited by somebody who took profits. But it never really caught the momentum because these projects that take off, they don't take off because word of mouth and all. No, never happens that way in the cryptocurrency world anymore. It never happens that way. The way that it happens is some influencer is given money and they push it, and it rises because of that. And why would you pick a garlic coin to do that? Well, garlic coin would be really easy to pump, but why not pump a currency that you made? Right? So if garlic coin is ever going to be pumped, I would have to do it, and I'm not going to do it. No, thank you. But maybe someday, when after I'm gone, garlic coin takes off in 100 years. And my children become rich beyond their wild, become multi-billionaires. Because by that point, when it takes off, it's gonna take off, because there won't be much supply out there after that. There won't be much supply out there after that. The street, Rivian and Lucid have difficult decisions to make if they want to survive. Rivian is not even like a real company at this point. Come on. Okay, whatever. Carl Quintilla, it's very tempting to argue that core sales were weak because people were forced to devote more of their cash flow to pay higher food and gas prices. But it is also true that the recent strength in core sales was unsustainable. It's true. Then he shows that the points at which it was really strong was driven largely by stimulus checks, and we are now coming back into the longer run average. Yes, sir. Well, it looks like my hesitance in the treasury is turning out to be correct. They were pushing down there and they moved back. I wouldn't be the one taking the reversal trade. I would rather be going along the bonds in this situation. But this just kind of shows you what kind of a market it is. So you kind of have to adjust accordingly. And for me, that's not the most favorable environment. Because really what you have is you have a range-bound market during a very high volatility regime. So they're going to make a move that seems like a trend, and then they're going to reverse. And the mean reversion is just going to be absolutely brutal. So any kind of a trade in that area is kind of sketchy, because you don't necessarily have a really good probability, and the amount of adverse excursion that you could get off of just a gamble is like way too high. Way too high. And I guess I failed to note that while there was some initial downside action, the orders buying in the S&P 500 did win out and pushed us higher. And all of the talking heads are saying that stocks are up today. I wouldn't say that it's anything to really get too excited about, but they have to put something out there, right? I know how they feel. I haven't been doing it lately, but on TikTok, I would do that whole thing like on today's episode, sort of a thing, like it was a Dragon Ball Z episode recap every day. And like it kind of got to the point where when things were going really bad, where it just wasn't fun anymore, because there wasn't actually any stories other than that the market went down. And how do you make fun of that? Hey, Autolocus. How you can only make fun of the market going down so many different ways, right? The Hill Omar presses Education Secretary for details on student loan forgiveness. Hey, you remember when the big story was that Joe Biden had decided that he was going to do student loan forgiveness, and then we haven't heard anything about it since then, have we? TikTok still's out. Well, of course. I don't care about that. What I care about is that it has the best discovery. Maybe you know what, they've kind of changed things around in YouTube, so I may start posting them here to YouTube again. Kind of stopped because it was messing up all of the stats, but look at that. Look at the liquidity here in the 10-year. Like I could hit, well, okay, it just changed, but for a second there, I could have hit it and opened up a 15-tick spread. Overstock is poised to take advantage of the inventory glut plaguing retailers like Target and Walmart. This is a story pertinent to my interests. The online retailer will have a lot of goods to choose from as chains like Walmart and Target try to sell excess merchandise. The e-commerce company specializes in helping chains move merchandise, and now it will have more opportunities than usual. U.S. retailers rackled up excess goods to ensure shelves stayed full during the pandemic, but now shoppers have shifted spending to categories like services and travel, leaving warehouses overflowing. That may help Overstock rebound from a rough stretch. Its shares have fallen 48% this year, while sales have declined for 3 straight quarters. Under Chief Executive Officer Jonathan Johnson, who, to be honest, is a little bit of a libertarian nut. He's not crazy. He seems like a nice guy, but his political leanings are pretty far libertarian. Okay. The company also shifted to selling mostly home goods, which traditionally have better margins and are been growing faster than other categories. So does that mean that I could get a couch from them? Have you considered a separate channel to not mess up the stats to build the diversity of channels? So one for shorts? Yes, but I kind of don't see the point of it at that point. Like, so here's the thing. If I make another YouTube and I do YouTube shorts, and then people like the YouTube short, they might follow that channel, but it doesn't get me subscribers over on this channel, right? And with the way that my funnel, I guess you could say, is set up, is that the funnel is to get people to subscribe to my channel, right? That's the goal, is to get the subscriber count on this channel up. We could get the subscriber count up over 10,000 subscribers. That's like our current goal, right? And that is the thing that could take this into a business that could cover my income so that I could spend more time doing research and making things for you guys, because I don't have enough time to do everything that I want to do over here in the markets. So that's the goal. But if it's from another channel, then they have to go and find my other channel. They have to forward themselves over to the other channel. So then at that point, it's the same problem as TikTok, is that you might get popular on TikTok, but not that many people on TikTok come over and subscribe to this channel, right? Like I'm pretty sure, like I have 6,000 on TikTok. I have almost 8,000 over here. And I'm pretty sure that they're like that the amount of crossover between them is really, really narrow. Right? But if I do the shorts on this channel, then when they subscribe to the shorts there directly, they're coming over to this channel. And when I look at the videos that I did put up with as shorts, I still get views from those on YouTube shorts. So with the changes that they've made, I think that it still shows up in my channel feed, which I really hate, but What you gonna do? What you gonna do, right? We probably need to get a little bit more into the on today's episode thing again, though, because that was funny and kind of helped people a little bit more. But here's the thing: I love arguing with the communists. They hate me so much, and I know it's probably like a really toxic thing for me, but I just can't get enough of it, man. Arguing with. Okay, why don't you simulcast on Twitch as well? I used to do that in the very, very beginning of the channel, but it didn't really do anything. And we stopped streaming on Twitch just because anytime that we did gain viewers from Twitch, they just annoyed me. So we kind of stopped doing it. Like the honest truth is that if we had at some point said, okay, we're gonna switch to only streaming on Twitch. Actually, didn't we do that for like a week? I don't remember, but maybe if we had done that before the GameStop thing, we might have gotten bigger, but I'm not going to stress it. Like when it really comes down to it, like that's all just kind of stressing about the extremes, the edges. The thing that brings new subscribers to the channel is making good videos that get pushed to people's YouTube front page. That's the thing that really grows the channel and gets us closer to our goals. The other thing that we can do that grows the channel is making our indicator package better. So I do have some plans for that. I'm still kind of testing things, but you know, I think that I have a good the issue on that one, as far as I understand it, is that not as many of you are using NinjaTrader as I thought. I would have thought that most of you were using NinjaTrader, but it's not that many that are doing that and getting anything. So I think that what I need to do on that point is there's a couple of things that I still want to clean up, because there was some newer members that they showed me some problems in there. There weren't really problems, but just they did things with it that I didn't expect. So I had to fix those. So there's a couple of fixes already that I haven't put out. But I also really want to test the whole, like, oh, by the way, I don't even have, hold on. Yes, this. How do I want to do this? Can I add the indicator? Add the indicator so that I can try and see if it will backtest. I fixed the backtest problems. Now we'll do the resting orders one. Okay. So I want to make sure that that part is all done, is it like works, and so you can like backtest level 2 stuff. And then we'll be able to backtest level 2 stuff, and then I will be able, then maybe we'll do a NinjaTrader webinar. Maybe have a trading view set of indicators. I'm gonna bet that the ones that are the most useful that they have, that they're you already have equivalents in trading view, actually. Well, go back to trading MES, or probably not. The thing wasn't just that the volatility was too high. I would rather trade the micro treasuries, right? Like if these go down, if the volatility of these go down and it's hard to make even $10 or $5 in the micro treasuries, like I'm fine with that. I'll keep trading it that way. Like the minimum risk, I'm more interested in that. I have to build up a lot before I'd be interested in like really trading E-minis again. And the issue is that I just don't have as many high probability setups over there, right? There's a little bit too much randomness in there. Anyways, so no, I think that the thing there is the crowning jewel of the indicators is being able to do level 2 stuff with a back test, right? And last time I tested it, there were some problems, and then I don't know, I keep forgetting to do anything with it. I don't know what I've been doing, but so I added it to a thing to see if I can try doing something here. Maybe I'll have, because it's been a little bit lighter of a week, but and I haven't been spending as much time working out. So once I got that out of the way, and then maybe at the end of the summer, I try and set up a webinar with NinjaTrader, and that will probably bring a lot of people, because basically the gist of it is that my target audience is all NinjaTrader users, and I have not really been actively marketing to them like that. So, because basically what I've been doing is I didn't make like a hard push per se, like a huge PR push, just because I knew that there was, I wanted to let it work its own things out. And so that has been happening. We do get subscribers for it, right? But it's just like, if you wanted that to be like your income, we'd have to be having like, 50 people a month buying it or something. That's a tough DAF and FOB in the same panel. Oh, you can already do that. Yeah. Pretty sure you can already do that. D here is the one that helped me realize a couple of the things in them that we needed to change, right? There's this one with the spread candles, and I was like a little bit unsure about if the changes that I made to it were working correctly, but I'm pretty sure that they are. So I do want to put that change out too. So there's that, and and a little enhancement or two into the spreads. And then yeah, there's this other one, this resting orders thing that we'll put out, but we'll see if it back tests. If it back tests, then we can do a thing, and that'll at least bring in, like, here's the thing. Like, here's the frustrating thing for me. I know when I say that, it's like, Seth, he sounds like he's short on money, right? Well, no, like, actually the problem is that the income that is generated from the YouTube channel is more than I know what to do with. Like, that's a frustrating thing. I want to hire employees. I want to enable myself to make more content. And I've been buying equipment and gear and things that I thought would make it easier for me to create content. And it has. I've really streamlined my content creation process, but it's still tough. And the biggest roadblock in there is having the time to spend writing scripts. Takes me a long time to write these scripts. There's a lot of thought and sometimes research that has to go into making them, you know? So I would really like employees. I would really like to be able to pay for a video editor. Can you imagine? Because like sometimes here on stream, we share some good stuff. We talk about some good stuff, right? So it would be really nice to have an editor that could go through the videos after the fact and cut those all out and make interesting videos about them, and then we could have regular videos on a daily basis, right? That sort of a thing. Okay. But like there's enough income that I don't know what to do with it, but there's not enough income to pay somebody to live on it, right? To pay a video editor. So I don't know. So we just keep chugging along. I think so I had that gamma video and I did record it. I recall there was some things about it that I was unhappy about, but I think that we can still make the video because there'd be plenty of room to have like follow-up videos and stuff, right? So I think that I'll be able to put some work in on that this weekend, and I might be able to put that one out on Monday. So and then I also have a video coming about this KVM switch thing. I haven't talked about that yet, have I? But somebody sent me a KVM switch, and let me tell you what a rabbit hole KVM switches are. Because the KVM switches that they had are mostly HDMI, and apparently there aren't very many DisplayPort KVMs with the EDID, which is essentially a thing that emulates the monitor when the KVM is not actively switched to that, so that your computer doesn't think that your monitor is connecting and disconnecting and rearranges all of your icons and windows and stuff. So there actually is like a KVM switch out there that does do what I want, but it's like always out of stock and it's like $600. Whereas this one's like $200. But this one is HDMI, which I thought would be fine, but it turns out that like converting a DisplayPort to an HDMI is just I had to get the right converter, and I didn't have enough HDMI outs on my desktop, and then this monitor only does DisplayPort. So there was all this nonsense with that. But I think I finally sorted it all out. Oh, and then the other thing is that it doesn't support the high. So this monitor I normally would have on high refresh rate, and today I don't. Today it's the 60. And we'll try it like that for a while and see how I feel about it. I very much prefer the high refresh rate, but I don't use this monitor that much, so. Seth been chiefing on that green. Well, my plan right now is. Oh, hold on. News Squawk is just kind of reviewing current market conditions. Oh yeah, I choked on my water. Yep. Are we rolling? Yeah, if you haven't rolled over, you need to be rolled over now. I'm actually surprised that your broker would allow you to trade the old one. Yeah, so the next big project that I have is replacing this desk. So I did get a desktop that is cherry, and we're gonna do some work on it, I guess. Um, we were talking about it the week before the baby was born, so it's been like 3 or 4 weeks. So I kind of need to start looking at my schedule and start talking to them about doing that. And so I'll probably have to spend a little bit to finish making the desk because we're gonna have to buy like steel for it and stuff. It's gonna be like really hefty. And then after that, I may splurge. I may splurge on the monitor arm. I found the best monitor arm. It's like $250, but it's the only thing that does what I want. So I might splurge on that. But then after that, I think my plan is to just kind of chill and wait until the market is maybe a little bit more favorable. And that might be September. It might be sometime in 2023. The way that people are talking right now, because there's going to be a recession in 2023. You know, it's always like they're predicting a recession a year out. I don't know what the deal is with that. But anyways, then maybe we deploy some of the capital in the market. But in the meantime, what do I need to focus on? More content. I need to focus on more content. It's kind of funny. I was like, oh, I think I've got all of like the major pieces put together, right? And then other things started coming up. Like I want to make something about bonds. Like I'm realizing, well, I'm talking about like fundamentals are it's all about information. But there's so much information to know about the bonds and nowhere to learn about it that I know of. And why aren't I making videos about that? So I'm trying to make some videos about that. But then there's also some videos about like I need to make a video about how much money do you need. I think that's because I really think this whole thing about you don't really want to have more than 1% at risk on any one individual day is like a useful metric. I'm trying to get into wholesaling so I can put more money in the market. I don't know how much it goes down. If SPY was at $1, I'm gonna be buying. Well, that's that whole sort of thing is really interesting, G59, because I was thinking about that sort of thing yesterday, and because I was having the argument with the liberals again, where I was saying, okay, if you don't like what Procter and Gamble is doing, then why don't you copy one of their products and offer it for less? Because like you don't have to copy the whole company. Just like pick one product. What would that one product be? I don't know. I've seen these videos about like, here's how you do your research and you find something that you can sell and drop ship and everything. But like I look at that and I'm like, that doesn't seem I don't like the idea of I'm gonna sell something that I just randomly found on the marketplace, Like I think I need to I think that if you're gonna be successful in business, you need to believe a little bit more in what you're doing than that. And there's a lot of competition in that space. But then it was like, well, but why would I even go through all of that effort of running the business? I'm not so sure that I am really actually a good business owner or would be a good business owner. I think that I probably, I think that I do really great here running the YouTube channel. I think I do a really good job. Oh my gosh. Yeah, I know. You know what? I actually, everybody on YouTube has been having problems with this spam. So, anyways, but if I was like a business owner, like running a restaurant or producing a product or something like that, I wouldn't necessarily be very good at it. I would basically have to. Okay, so like Linus Tech Tips. Linus Tech Tips is such a good example of a business owner that is really good at what he does. Like that's really why he's been able to get to where he is today, I think, is because one, he really knew what he was talking about when it came to computer hardware, and that's how he got started, and he was entertaining, right? So then he was able to transition into becoming an expert content creator and building a good team around him. But then he was able to transition into being a good business owner, and he was a good business owner, and he takes risks, and he takes smart risks. Now, I think part of that was his wife. I think that his wife and some of the people around him really help him with that sort of a thing. But I would probably need that, right? If I was going to do that level of thing, because what happens to me is I'll get lost in the weeds, right? So I would need to be the idea guy, and I would need to have some really talented people that had a lot of leeway to take things from there, right? as kind of more of a co-business owners sort of thing. So if we get to that point. And yeah, like the other thing is that might not be where I think it would be if we get to that point. Have you ever thought about being a broker? You don't have to trade, you just take commissions? Well, so I think that what Futures Trader 71 does is a little bit different from just being a broker. He works with the broker, but I don't know. Like here's the thing, what would I don't envy the people that are brokers, right? It's hard to find people and convince them to use you versus AMP, right? I think that something that we could do is we could build our own platform. I think I can make a better platform. I think if I was in charge, I would make a better platform. Really do. I don't have the resources yet. Hey, if you wanna give me like $3 million, if you know anybody that wants to invest in a platform, wants to give me $3 million, I think that we could make a better platform and create a pretty solid continuous income stream. Although now is probably not the time to do it. I really want to see what Jigsaw's next string of things could be, because I think that something that we might be doing a lot of is, if we have more ability to piggyback on Jigsaw, I would probably rather start there, right? I think the good money is in making a turn and burn tryout film if you know how to start one, because if you get failure traders, you make money, and if you find good ones, you make money. Yeah. Yeah, I don't necessarily disagree. Running a prop firm would be interesting, but I think that if I was going to run a prop firm, the only reason that I would do it is because I thought that I was going to be able to change the industry, right? And I kind of question if the thing that I would do to change the industry would really be better or not. Like from my perspective, a top step trader or whatever doesn't make sense anymore now that we have micro futures. Like it only makes sense in as much as you can convince people to try out and fail, right? But I would much rather run like a hybrid broker prop firm, right? Like I'm your broker, you're trading your own money. I can selectively choose to give you more money, but really what I'm doing is I'm going to make money from you trading and you trading as much as possible. So I'm making money on the way that the broker trades, or that the broker makes money. But I'm also making money on a monthly fee of some sort. Now, I think that there are some like regulatory barriers to doing that sort of a thing. But that's kind of like my vision of something like that. Is that it wouldn't be as much a prop firm as it would be a broker with additional services. And one of the potential upsides of being on this broker is that you could get funded. Do I need special data feed for indicators, level 2, and resting orders? So I wouldn't call it a special data feed, but yes. So if you want full level 2, it's a different feed. It's usually like the default feed that your broker will offer you. But if you can see the DOM, if you can open up the DOM and see everything on the DOM, then my indicators should work for you. Yeah, really what we should be calling it is the market depth, but you want the full market depth or depth of market or whatever you want to call it. Well, it's really interesting to me how high we went in the treasury. And of course, it's seesawing all the way back. So it is just incredibly volatile. Range bound, but volatile. I'm wondering what happens if the rates get raised by a full 1%. Oh, I think. I mean, all of the analyst reports that I'm reading are saying that a 75 basis point hike will easily push us into a recession. So I don't necessarily want to think about what a full percent would be. Right. Yeah, actually, Overstock does have some good deals. On like if I want to buy furniture. How bad is mortgage? Oh, dude, the mortgage. Listen, I don't know if this is actually going to make housing prices move down, but housing market activity is going to slow down a lot. Like, so many people are being priced out of the market by the interest rates raising. It's why, like, when you look at the numbers and like where we are relative to the past and everything, it's a little zany. Let's see if I can find it. It was like home affordability, I think it was chart. Let's see if I can find one. Home affordability index. Is that it? I really love your synthetic dollar index indicator. It works. Yeah. Thank you very much. It really is. Like honestly, it's like, why don't the platforms have these, right? Same with the spreads. It's really like, how come NinjaTrader doesn't have a spread? And there are some other platforms that do have spreads, but I think mine is actually better now. Like the way that I have mine set up is I think it's actually better. So especially now that I've got a candles one that is working really well. The only problem with the spread indicator as it is right now, I don't know. For the candles, I don't know if you actually really want to use candles on a short-term chart, because then you get things like this. So like, why do I have a line like that and like that, like that, like that? Like, shouldn't there not be a gap between them? And the answer is that there wasn't really all that much volume in that particular bar. So it was all only one way, and that's why you're able to get that gap. At least I believe that's the case. So I can come in and I can like add here. Spread. And 5 ZB2 apply. Right. Oh, so something that just happened there is because I reset it. You don't get those ones because now it's using the historical data to generate the candles. So that's the change, is that it will use the historical data on the candles, and then when you're live, it will use the live data to construct them. And I was like, how do I confirm that the live data is working? Yada, 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 yada. Well, I'll leave it on there like that. We'll come back and look at it again in a little bit. 30 minutes or whatever. What did the academic white sheet say about short-term trading being in a position less than 10 minutes? Well, I don't know, that retail traders that try to do it tend to lose money. I've seen a lot of papers about proving short-term signals, right? It's just like the ones that they talk about, they're like, there's no way that you're going to be fast enough to catch them. Wonder what happens to a CFD if we had a shortfall in ES and EQ. I don't know. I'm glad that I'm not a CFD, or that I don't trade CFDs, so that I don't ever have to worry about it. Because I'm not a huge fan of the CFD game. Like, there's a reason why those aren't allowed in the United States, right? So they're basically bucket shops. No, that's not showing me a chart. This is the chart that I wanted. Housing affordability was actually like higher than that, but it was like, basically, houses are significantly less affordable now than they were. Like, when you add the interest rate on top of it, it's like nobody can buy a house now. So it's like a real problem. Like, can you imagine? Like, I think that I got something like 2% interest rate on my house, right? And now there's these people that are going to be trading, that are going to be possibly getting 7-8% interest rate on their houses. Like, it's not good for for society in the long run. It kind of makes you wonder, how long can the higher interest rates persist? I suppose it depends on what you think the primary driver of inflation is. Do you think that it was the policy or supply chain bottlenecks that are transitory, or Joe Biden? I mean, if it's Joe Biden, we're going back to our discussion yesterday. If it's Joe Biden, then it's going to be like this for a while, and it's going to suck hardcore. It's going to be like, it will go beyond it. Like once you're running into a market that stays in a downtrend for like 3 years, right? Is that when we start to call it like a mini depression or something? Because it's bad. The everything bubble. I am wonder. I mean, to the bigger problems that are going on right now, right? It seems like Japan is kind of the locus of things, right? So if we try and game out a recession actually happening, Federal Reserve raises interest rates 75 basis points. S&P 500 starts cratering over the next month and pushes down to 3,100, 34, between 3,000 and 3,400. And then this puts pressure on Japan. So then we have a sovereign debt crisis in Japan where the central bank in Japan implodes, right? And now we're talking about a real global financial crisis. And then that leads to contagion that harms the bond prices in periphery countries in the EU like Italy and Greece, right? And then that could feed back over into the United States. Like, and then we still have, so all that happens, and then oil prices are still comparatively high. Federal Reserve can't lower interest rates back down again. And that persists until like we get a change in government. You see the kind of the situation you're looking at there? China, also the mother of all Ponzi's. Here's my opinion of China. I think that the growth that they're seeing in China is legitimate growth. They are being quite effective at generating economic activity over there in China. It's just that all of that activity is basically forced and contrived and is not necessarily being put into the things that their society needs. And so they've created this huge real estate market over there in China that is basically worthless. They're building homes for people that all these ghost cities and stuff, right? So there could already had a pretty severe downturn in China, but it could get worse. You think housing markets will collapse too? Well, so the thing with the housing market is that housing activity is likely to decline for sure. But I am not entirely convinced that that will lead to a significant collapse in prices. I think that you might have prices will come down a little bit in some markets that were really crazy, like here in Utah. And I think that prices might go kind of sideways, but I'm not so sure that you're going to have like this widespread decline in the price of houses that leads to a broader financial crisis like you did in 2008. Because I think that the reality here is not that bunch of people are buying houses that couldn't afford them and shouldn't have had them and all of that sort of a thing. I think instead that we're just houses are becoming too expensive, and they're too expensive because there aren't enough of them. So raising the interest rates could really hamper activity. Like there's going to be demand destruction, but the lack of supply kind of makes up for that, right? Gambling businesses will do amazing in the near future. That's what we need. That's what we should do is we should make a gambling website. I could make a gambling website. I feel like it won't happen because a lot of people want it to crash. Yeah, they really do, right? I don't know what the deal is. It seems like I'm like five years ahead of the rest of my generation for some reason. I was like, I got to get in a house now, and I did it, and it was a good thing. I knew what was happening. I knew what was coming. And then when the pandemic happened, I was even all the more glad. I remember thinking, I wish I had waited a year or two before selling my wife's house or whatever. It wouldn't have probably have worked out very well. And then I would have spent the whole pandemic in a house with a swamp cooler. Ew. No. I think I played it pretty good. Good. What if your secret? I think we already did. I already did a lot of that today, D. I can only give you so much. Listen, you can't. Oh my gosh, 6K lot on 020. What the fetch? Was that really that big? Yep. 5K. And then they pulled some of it. Shenanigans at 8:30? At 8:30, why? That to me, I think something could happen off of that, but that to me is not one I'm gonna mess with. Remember I was saying in my video about that, right? Was when you see those spoofs, like you're meant to see a spoof like that. Don't reward them. This is what I say, is don't reward them. Like I'm not going to trade it now. For sure. Maybe we could have taken a trade in the last third. I'm definitely not going to trade it now. I'm not going to give them the volume. You weren't going to play games like that? Then just watch all of the liquidity dry up. Anyways, you can't get, an FOMC meeting and all of this market volatility and get some of the best market nuggets of wisdom from Seth as well. It's just a little bit too much for one day, D. The 7K and QQ shills look more and more credible now. What are they at right now? Now it's moving too much. Oh, wait, there's some people that think that the NQ is going to drop to 7,000 when it's 11,000 right now. Yep, I will be here at 2 p.m. today. Yes. Let's come over here and actually make that stream right now while we're thinking about it. Schedule stream. Reuse settings. Federal Reserve Press Conference live reaction. That's the 15th. Yes. Public. And it will be at 2 Eastern time. Done. Well, when was the last time that you saw like a 32 tick move down and then 32 tick move up and then a 32 tick move back down in the treasury, huh? That's pretty wild stuff. Anthony will be live in 90 minutes. Anthony, you gotta do it at 9 o'clock. See, if you were doing it at 9 o'clock, I could send all my viewers over there. Don't wait an hour in between. Nassim Taleb, Bitcoin will be a goldmine for lawyers. When negotiations are fuzzy, there is a lot of room for civil suits, as with the junk bond debacle, and addition to criminal ones, e.g. Milken. If you bought cryptos based on an explicit recommendation, make sure you have the screenshots. Yep, there's going to be, people are going to get sued. People are going to get sued hardcore. There is no way after everything that's happened so far that the government is not going to come in and regulate cryptocurrencies now, right? Because you can't have all of these blow ups. They're just not. They cannot, in good conscience, like if the regulatory agencies continued to allow that to happen, they would basically lose all legitimacy. Coinbase is so desperate to sell shitcoins that they're tying shitcoins to sweepstake events, says Bitfinex. Yeah, I am a little surprised that Coinbase is doing listing new tokens. People will learn to not buy Ponzi's more than regulation, I would hope. Yeah, I don't know. Regulation is the best what can happen to cryptos? No. It's not, because the problem is, again, you got to realize that the Bitcoin market has not had organic growth since basically 2016. So like everything going back to like 1K in Bitcoin is basically been the result of Ponzi schemes, right? So if the government regulates cryptocurrencies, right? Where are they going to go from there, right? Even if they do continue to grow, you're not going to get the insane numbers that you got these last 2 cycles. I'm not exaggerating it a little bit. It's like straight up. Almost all of the economic activity that's happened in Bitcoin since 2016 has been the result of a Ponzi scheme. Just a bit. Oh, okay. I'm working on a crypto company. If it would be regulated, we have more customers. Yeah, well, yeah. I mean, but the problem is that the again, it's not going to make up for the deflation that's happening, right? And you really have to wonder, after all this, who really wants to be invested in that? I don't know, man. I guess technical analysis is a powerful drug, I guess you could say, because there's going to be plenty of people going to be trying to buy the dip. But I really don't see how anybody that got screwed over in this whole DeFi yields kind of debacle, why would any of those people want to be involved in the crypto market now? Right. And I think that the public is largely turning against it. Like they're very upset about what it's doing to the environment. The gamers are upset about what it's doing to video card prices. Oh man, do you think that we'll get good video card prices again? Maybe. I can only hope. It's possible that Bitcoin could be in complete collapse by the time that the GeForce 4000 series comes along. Can only hope. Can only hope that at the same time that the 4 series comes out, that there's this huge glut of video cards that come out onto the market of 3 series cards, and it gets cheap again. And then we can start playing. Unreal Engine 4 level games. Ooh, it'd be lovely. Yeah, after Luna collapsed, they created a Luna 2, and who invested in that? Like really? There's some people out there. I think part of it might be, especially in the Ethereum space, is that there probably are a bunch of old timers that have had Ethereum for a really long time. And so they're willing to gamble with it because to them, it's not like real money, But come on. It's a lot of money that they lost. That, and there's this whole thing about like you lose 30% of your money when you try and transfer it with Ethereum because gas prices are so ridiculous. GPU prices aren't too bad right now. Yeah. I mean, well, but like PM, you got to remember that I remember a time when $500 for a top of the line video card was steep, right? I have a 1060 and I bought that for $200. And I think that they're still going for $200. Like they're not bad, but they're probably not what they should be. It really should be like a 3060 Ti should be $150. Oh, you got a 3090 for 75% of MRSP? Really? I don't know. I'm saving my money up for the desk, but one of the things that I have had on my list is a new video card, but I don't know if I really want to spend money on that or not. Or a new computer. We might just splurge on a new computer. Especially if we get to the point where I'm doing a lot of stuff with machine learning stuff, then having a powerhouse compute platform would be really nice, right? You got a 3070 for retail. That's good. Well, I'm gonna wait for the 4 series cards, but I'm hoping that I can get a 4070 for like $400. That's what I'm hoping. When Tether says that they redeemed 11 billion tethers for a customer, it's important to remember that Bitfinex is a customer of Tether. Oh, what's going on with oil here? They're having a pretty sharp reversal. And the S&P 500 giving up its gains. Dude, when that news hits, can you, if it comes out and it's a 50 basis point hike, I'm just gonna go crazy. If it's not 75, then it's just gonna be chaos. It's just gonna be like, whoosh. This market is just gonna go like, cause really, what market maker is gonna go and put money out in this market, right? Like, you are gonna be at the market's mercy when this thing hits. And if it's not 75 basis points, if it is 75 basis points, it's still going to move a lot. But if it's not 75 basis points, it's going to be insane. 50 basis points would be so... I know, right? If it's 50 basis points, then the treasuries are probably going to fall, at 25 basis points alone. Because again, on Monday, we had a 28 basis point range day in the 10-year. So just off of that one story. It's going to be insane. It's going to be fun. I'm not going to trade it. I'm just going to sit here and laugh. Yes, sir. Now, I probably will sit here and cry about my 401k. It's probably what's going to happen. Hey, NASDAQ, you're a little late, man. I only got like 15 minutes to see you. That's okay. We got the meeting later. We could probably not even sim, to be honest with you. Probably not even sim. We can try. If it's not 70 basis points, 75 basis points, we can try throwing an order in there and see what. But I don't think it's going to be tradable. Would a 50 basis point hike completely destroy the Federal Reserve's reputation? I don't know. I'm a little bit skeptical about the reputational arguments. Like, I'm kind of against this whole idea of so and so says X thing, so we should do this, right? Like, if they have a good reason and I agree with their analysis, then I'm all in. Especially, with people that I respect. But everybody kind of seems to have this idea that the Federal Reserve has to be incredibly accurate with their predictions in order for the market to take them seriously. And I say that it doesn't matter, because the federal funds rate has a real active impact on the economy. People focus on the forward guidance and all of that sort of stuff because it affects orders so much and it has an impact on current market prices so much. But really, the federal funds rate is an effective tool in and of itself. So I'm a little unsure how much their reputation, how important that really is. They had a good I think they did. Or at least I thought that they had a reasonable theory. I disagreed with their theory at the time, but I at least thought that it was like a legitimate argument. It wasn't like some of the stuff that I'm seeing these days from the left about, oh, well, oil companies are making too much money, so we should tax them more. That will surely cause them to pump more. Okay. Yeah, reputation means nothing when you suck money out of the system. This is, I have to say, that with the Federal Reserve is special. Remember our framework, right? Orders move markets. Okay. Now, you always kind of run into this situation where, if it's something that you're really certain about, then the orders that you'd be looking to front run have already happened and it's already moved. And so you miss it, right? But that is never the case with the Federal Reserve, because the Federal Reserve is basically telling you at this point in the future, there will be orders like this. They're basically, they're saying that yesterday the orders were for this interest rate, and tomorrow they will be for this interest rate, right? So their impact will happen no matter what the market price is in. And that makes it unique. There's no other situation like that, especially when they're doing QE, especially when they're then it's really crazy, right? But just changing the interest rate, yeah, it has an impact. So I'm not saying that the reputation is worthless, but I'm just saying I think that the Federal Reserve can still accomplish its goals even if everybody hates them. Now, there was also good reasons for there to be peak inflation. You know what? I in fact, I'll go out on a limb here and say that the theory for peak inflation has not been damaged by the CPI report on Friday as much as the market thinks it has. Core inflation was not that high, and it seems to me that it's oil prices that are driving inflation right now. So I think that some of those things that people were expecting to see maybe really did happen, and it's just that other things have happened since, right? Okay, but that dog is barking like crazy because he can hear somebody upstairs moving. Well, we got anything here? Oh, do I not follow Ninja Trader on Twitter? What the hell? I guess I just didn't know that they had a Twitter. They've been doing more live streams lately, haven't they? Just keeping an eye on Twitter here. Yeah, S&P is dropping hard here, man. So don't necessarily see any good rhyme or reason for any of these moves. If the treasuries continue the pattern that they've been doing, then they'll reverse in this location. But again, I think we're in a situation where I really don't have any ability to predict those kinds of pivots there. Like it could go and trend down very heavily just to prove us wrong, right? Just for no other reason than that. So that's not necessarily a situation where I want to put money at risk, right? The reason is that we're in a bubble. Are we still in a bubble though, really? I don't know. One of the things that goes through my head about all of this when I try and game out like a recession here is that the Federal Reserve ends up having to reduce interest rates almost as quickly as they rose them. So then doesn't that just inflate the bubble back up again? Like we had a slight deflation of a bubble, but it didn't pop, and then they're just blowing it back up again. Maybe. And again, when you look at the problems that like the United States were the reserve currency, right? So it's different. But the non-reserve currencies, okay, like the Japanese yen, doesn't look so pretty over there, does it? Euro, or emergency meetings over in the euro and everything. There's no financial crisis going on. It's just the market is just doing its thing. Right? When the market is just doing its thing based on the environment that you created and it's leading to panic, that's not a good situation. It's not a good situation. Oil prices not affordable. I'm gonna say that oil prices are on the edge of unaffordable. I actually think that we're like right where people can still afford it, but once you get above the prices that we have, you could start to get serious demand destruction. Yeah, it's so weird. You can never win. Like the oil thing is another. It's another one of those. It doesn't matter what you do, you lose, right? Because if we move, the left thinks that the solution to oil prices and oil pollution and oil companies being too powerful, etc., 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 is electric vehicles. It seems like they all think that that's the thing: electric vehicles and renewable energy. And like, here's the problem: there's not enough copper. There is not enough cobalt out there to make all of these things that for everybody to move over to them. There's not. And you know what? Mining for rare earth minerals is way ridiculously more destructive to the environment than oil drilling is. So chew on that one, right? Hey, there you go. Were you the one that was saying that earlier, Siku? I don't recall. The Fed should just do 250 points, destroy demand completely, and get it done and over with, and then start lowering a year from. Nuclear fusion would help, but then how do you deal with the cars still, though, right? Unless we generate nuclear reactors in cars. Yeah, I don't think that one's gonna happen. No. There is not no. There is plenty of thorium. Thorium is just the natural byproduct of existing mining. There's so much of it that they just dump it. That much liquidity made people think that they could invest money into ideas for 8 digits, yeah. But keep in mind, the past Fed cut rates and did QE to help the economy. Now they cannot do that, so they are really trapped. Yeah, I think so. No, I think you're right, Visual Trader. Does the Federal Reserve have to immediately lower interest rates? Only if it creates a real severe, all of the sudden recession sort of a thing, right? And even then, maybe you just reduce interest rates like 25 basis points. But you still kind of have this issue where the longer run inflationary pressures are not solved by raising interest rates, right? So all interest rates does is reduce economic activity. So essentially what you run into is what in order for the Federal Reserve to maintain their price stability mandate, they have to enact demand destruction, essentially, right? They have to harm the economy enough to get prices back in line. And so as long as these policies are in place that are creating the high inflation, our growth is capped. There's a cap on growth. That's not a good situation, is it? Why is Dow Jones going up if there's, well, at the moment, it's not really, well, okay, it reversed a little bit. So there's something going on, Kaka, in the options that is a little interesting, because in previous market cycles, expiration cycles, they were very much short gamma, or sorry, yeah, I think it's short gamma, which basically means that when they cross certain lines, it causes acceleration. And this market is different. And so in this market, it really is kind of creating a range. So the S&P 500 has a large degree of options interest at 7,000, or sorry, 3,700. At 3,700, the market makers essentially start buying underneath of 3,700. So it's really, really hard to break the market and stay below 3,700. They could totally do it. Like, that's the thing, is that if they get down to like 3,650, then look out. Like, then it's going to be like real chaos again, right? But for now, the options are basically keeping us pegged. I wouldn't, in fact, it may actually be the more probable case that we have a 75 basis point hike, there's a ton of market volatility, and then the S&P 500 balances back out around 3,750 again. And that's where we end the week. And then next week, we, at least at the beginning of the week, we actually have a short covering rally. That's kind of what the options suggest will happen right now. It's just that there is so many orders that are going to be executed between now and then that situation could very easily change. But at the moment, that's the most likely outcome. If all of the oil was used, no, because rockets do not use oil, right? Rockets use hydrogen and nitrogen, or I forget what they're using. We could still use nuclear, thorium reactors, etc. Hopefully the market has the memory that Biden has. They just forget about it. Yeah. Hey Kaka, thank you for the donation. I appreciate it. If all the crude oil was used up and oh no, I already answered that, right? Man, well, it's time for me. Oh, I'm over time. Well, guys, I gotta get going. I will see you a little bit later, all right? In the meantime, stay profitable, friends. Or at least don't blow it all. No, save it for after the meeting. Save it for next week. That's what I'm doing.